Hi, welcome to the Market Alert for Friday, the 23rd of September 2022. So, global hawknado hammers stocks and bonds and the dollar. That's, of course, the US increasing rates by 75 basis points on Wednesday, and yesterday the Bank of England 50 basis points. US stocks declined and bonds sold off after a plethora of central bank rate hikes and Japan's FX intervention. No rate rises in Japan yet. Yen surges as UST tumble on historic intervention, so they're still trying to support the economy in Japan. Economic news for today. Let's have a look. PMIs today, so that's going to be interesting. They don't want to come out higher than forecast, that's for sure, because that will actually add to the inflation. We've also got flash news today as well. So a lot of news, but again, the main event is going to be Powell speaking at 7 p.m. This evening, so he's out once more. Gold-silver ratio has certainly dropped markedly over the last few weeks. We're down 11 there, which is good to see, but still way too high. Coming out of the ground and mines is 7-1 on the futures market and derivatives. The rig market is 85-1, so you can see still silver being suppressed severely outside of the real world. Okay, let's have a look at yesterday and Wednesday's market action. Well, actually, it would be, wouldn't it? When did I disappear? Wednesday. Yeah, so Wednesday and Thursday's market activity, and see what happened with regards to the reaction to the rate increases. So in the Dow, we can see that Wednesday, obviously, in reaction to the Fed, the markets moved lower, taking out, it traded down to the 30,131, and then yesterday, quieter day, with an increase in volume, so a bit of demand around there. The market took this out, but has actually fought back, and overnight you can see this also. So in the 30-minute, you can see the market's reaction on Wednesday to the 75 basis points. The market sold off sharply. What did it actually sell off? Let's just have a quick look. So from the high of here down to there, we dropped 911 points on that news on Wednesday, and the market then traded overnight just sideways overnight there, which you can see, and then moved back up yesterday early hours, and then yesterday just stuck in a sideways range. Didn't really do a lot. So I just come down and had a look at yesterday's low, which is interesting, where it did find support. And also going back to the daily chart, you can see there's a spike in the volume there in a narrow range, so there's some demand there. They're holding the market at this level, so it's important that the low holds so they can get this market brought back. And now we've got the rate increases out of the way. We've got the flash news today, but there's no reason why they can't bring this back, unless of course geopolitically with Russia threatening nuclear missiles, then that's a completely different thing. But otherwise, just on economic news, there isn't any that would really send the market to the downside strongly. In the German DAX, similar picture. Wednesday, we saw some demand coming into the market, but then we had the UK rate rise yesterday. We're down at 12,431, which is a support going back to July, which you can see there. So the market's looking at this level as a bit of a major support. Overnight prices are sideways to lower. And just have a look at those. You can see there, just in a range. Again, picking up yesterday's low there. That's not yesterday's low. Yesterday's low is down here, but the low of Wednesday. So we're in that sort of area at the moment. Yesterday, the market moving up strongly from the off after the US rate rise, which you can see there in the sell-off. Yesterday, very strong, all the way back to 89% before the market then moved down as the UK increased rates at the lunchtime. In the 5-minute chart going back to Wednesday, you can see the reaction there for the US rates, and then the market selling off. And then during yesterday's trading session, you can see that strong move in the 5-minute chart moving up. You can see prices once again coming off Wednesday's lows, and you've got your retracement in there, and then just all the way up, and you can see that that's 100, 200, nearly 250 points until yesterday afternoon when the Dow opened. You can see prices then moving lower. Well, it's actually after the you've got the UK rates rise there. The market came back to the DP. They brought it back up, and then just after 1:30, the market starts to move down. 2 o'clock, it's well and truly moving down, and then it gets stuck in a sideways range, which it's been in for quite some time overnight. We had a bit of a shakeout here, but we're already back above this level. So like all of these markets, you're looking for the low of yesterday to play a crucial part in holding the long side, and also getting above the high as well. And in between this, you want to see the market get back above that DP level and take out the 200 MA in the 30-minute chart there. In the S&P, also we see the 89 being taken out yesterday, but it was already hit. Well, I actually took it out on Wednesday with the interest rate news. We've got demand here. This is one is actually highlighted. The one in the Dow isn't, but it visually is exactly the same. And you can see there that prices are again trying to hold. 3721 is an important area there as well. And in the 30-minute chart, again, you've got Wednesday night's interest rate reaction, yesterday's consolidation, and then overnight you've got the market coming back off Thursday's low there and trying to move higher. And again, you keep in mind the high, the DP, and any averages in the way, and any other pivots in the way, and BRNs as the market attempts to move to these areas. In the FTSE, also you'll see prices down for the last 2 days. An interesting area here. Let me just draw in a fib retracement, see if we've taken out the 89. We're just sitting at the 89. So this low of 7129 is going to be interesting as well. 7,100 would be more important, psychological level. But again, holding at the moment. There's the low for yesterday, which we can see here. We had the retracement up, we shot up, and then we had the UK rates, the increase there of 50 basis points. The market down to Wednesday's low, bouncing off that, but overnight the market back down to this level. It's got to take this out. Again, as I've already said, watch the low, DP and close need to be above the 200 MA and high on the upside. They're the obstacles, along with the psychological levels as well. And the rate increase yesterday certainly played havoc with the yen, GBP yen, which you'll see there, and the market trading down to the 159.426, which goes all the way back to the 1st of August, and we're also below the 200 MA there. Big sell-off. This actually came early in the day at 9:30, and I can't see what news there was to move the market down unless it was preempted. I don't know. But the yen certainly coming under pressure, or GBP yen coming under pressure. Since then, though, the market has been in a sideways range, again holding above yesterday's low at the moment. Needs to take out all these other areas if it is to move back to the upside. Potential sell areas and reversal areas as well. In the pound, also some significant volume coming in there yesterday. We're now down to 112. 110 is the 1985 low, which we've seen earlier this week, but continuing to move down there. If you look at the monthly chart, you'll see on this platform I don't have any more support to the left, and therefore can't show. But we did look earlier on in the week, and it's 110. $1.10 is the number that we'll be looking for on the downside, because once we get past that, we're likely to go to parity of 1-to-1 with the US dollar. And finally, in the metals, silver is still stuck in a sideways range and has handled the recent few days of rate increases and the rapidly moving dollar to the upside very well. You can see they're still in a sideways range, and also the market's moving low. So it looks like for the metals, there's a lot of switching going on. Maybe there's the time has come that people are realising that the Fed still mean business. The inflation's going to continue, and they're going to start moving out and into the metals for the longer term. That appears to be the case. Wednesdays, the market saw silver move up as long with gold and then sell back off. But yesterday, again, you're seeing the same thing. So it's still holding in its range. Gold, the same for Wednesday. Thursday, not so good as it came back below the 5-bar moving average. Stuck in the sideways range at the moment. Again, you can see that reaction up, then back, and then up again yesterday. And that's because the dollar continues to move to the upside. 111.53, 120 is the high on the upside, so we've got a bit to go yet for the dollar index for breaking the all-time high. And finally, crude oil stuck in the sideways range. Like I say, it's consolidating. For me, this is going to start moving back to the upside going forward as things escalate with the war, and also as we move into the winter and certainly past the midterm elections. Okay, let's see what the flash news and PPI news brings today, and hopefully there's no more geopolitical news and we get a bit of a bounce to the upside for the markets. And we're heading into the weekend as well, aren't we? So have a great weekend, and as ever, thanks for watching. See you in the next one.